Welcome to TalkTickers. We're here to cut through the earnings call jargon and give you the key takeaways.
Exactly. And today we're diving into Cellebrite's first quarter 2025 results call.
Right. For anyone maybe less familiar, Cellebrite, they're big in the digital investigation platform space.
What?
Think tech for public safety, intelligence, even enterprises, helping them navigate digital crime and data.
That's the core of it. We've listened to the call, heard from Interim CEO Tom Hogan, CFO Donna Gerner, CRO Marcus Chouel, and Ronan Arman, the Chief Products and Technology Officer.
Okay. And the overall picture?
Generally solid growth. Pretty much according to plan, but with, some interesting details in specific regions and segments they talked about.
Gotcha. So let's hit the highlights first. Q1 2025 numbers, what jumped out?
Well, year over year, ARR, that's annual recurring revenue, was up 23%.
Pretty strong.
Yeah. And adjusted EBITDA growth was even better, 34% up.
Which gets them to an adjusted EBITDA margin of what, 22%?
Yeah, that's right, 22%. Their non-GAAP gross margin landed at 84.4%. Still really high, obviously, but it was down slightly, about 130 basis points from last year.
Okay. And operating income?
Non-GAAP operating income was $22 million. Non-GAAP net income came in at $26.2 million.
And earnings per share?
Diluted non-GAAP EPS was 10 cents. That's a 25% jump year over year.
Nice growth there. They also mentioned that rule of X metric, right? How did that look?
They did. It hit 45 for the quarter itself and 48 for the trailing 12 months. So, comfortably inside that 45 to 50 range they've committed to.
Good stuff. Total revenue?
$117.5 million for Q1. That's 20% growth compared to last year. And get this, 89% of that is subscription revenue. Really sticky.
Wow, yeah, that's high. How's the cash situation?
Looking healthy. They ended the quarter with almost $260 million, $259.8 million to be exact in cash, equivalents, and investments. That's up from Q4 and up from Q1 last year.
And cash flow?
Free cash flow was strong too, $18.5 million. That's a big improvement year over year, directly tied to, the solid underlying results.
Okay. Any geographic callouts? Where were they seeing strength?
Yeah, they highlighted U.S. state and local government specifically. Also Latin America and Asia Pacific were doing well.
And the softer spots?
Mentioned some, let's say, modest shortfalls in U.S. federal business and also in EMEA.
All right. And customer retention?
Gross retention held steady at 92%. They said it was particularly strong in the U.S. and Asia Pacific. Oh, and headcount ended Q1 with 1,192 employees.
Okay, so that's the quick overview. Seems like a solid quarter overall, but definitely some nuances in certain areas management is watching.
Exactly. Now let's dig a bit deeper into the drivers in the strategy talk.
Right. That ARR number, $408 million for the last year. Where's that growth really coming from? New customers?
Less about floods of new customers, actually. Yeah. Management pointed more towards increased spending within their existing installed base, getting current clients to use more, spend more.
Interesting. That says something about the platform, right? Stickiness.
Definitely. And breaking down that ARR geographically, America's the biggest slice, 54%, grew 27%. EMEA is 34%, grew 15%. And Asia Pacific, 12% share, but grew a strong 28%.
And within the product families, what's driving the expansion?
Most of the net AR expansion came from the Insights family. That's their sort of core digital forensic stuff.
Including the legacy products.
Yeah. And an interesting tidbit, a high single-digit percentage of the $14 million net increase in ARR actually came from migrating those legacy users onto Insights. So that represents the extra spend from those upgrades.
Got it. What about that slight dip in gross margin?
Primarily two things: higher incremental costs for hosting their cloud stuff and more investment in customer success teams, which, makes sense given the push towards cloud and those migrations.
Yeah, aligns with the strategy. Operating expenses.
Up 13% year over year, mostly personnel costs, more people, merit increases, also higher event costs, and more spending on consulting.
Okay. And the strong free cash flow just reflects the healthy core business, as you said.
Pretty much, yeah. Fundamental results driving it.
Okay, let's shift to the commentary. How's management feeling about the market, their strategy?
They seem positive, feel the value proposition is hitting home, seeing good interest, more uptake on Insights, and hearing from customers that they're getting real value.
Product adoption is obviously key. How's that going?
The Insights migration is a big one. They said over 30% of the install base has converted now, and they feel they're, quote, on track for their 50% conversion goal this year in 2025.
And Guardian, that seemed like a highlight.
Huge highlight. Over 100% year-over-year ARR growth for the third quarter straight.
Wow.
And the number of customers using both Insights and Guardian has almost tripled. They position it as like purpose-built for collaboration and chain of custody. So it helps customers, but also crucially expands Cellebrite's wallet share.
Makes sense. What about Pathfinder?
That one's growing more in line with the core business overall. They've rolled out new features, including a cloud option. They know it has good product market fit, but they're working on making it easier for, well, mass adoption.
And the idea of selling multiple solutions together, is that working?
Definitely. They said transactions with 2 or more flagship solutions like Insights plus Guardian perhaps are driving much bigger average deal sizes, often like 10 times an Insights deal alone. So the platform strategy is paying off there.
Okay, let's drill into U.S. federal. That was the soft spot mentioned. How significant is that segment?
It's pretty significant, about 17% of their 2024 revenue.
Yeah.
And historically, it's been a strong grower, like 25% ARR, KGR over the last 3 years.
So the Q1 softness stands out, but management sounded optimistic.
Yeah, they did. Despite the choppiness, they actually said they think the opportunity for future growth in federal has increased meaningfully in just the last 2 quarters.
Okay, what's driving that optimism then?
A couple of things. Structural changes they've made internally, launching a dedicated federal solutions unit. And importantly, they're pursuing FedRAMP authorization.
Ah, FedRAMP. That's the big one for government cloud security, right?
Exactly. Getting that is key to unlocking wider cloud deals within the U.S. government. It's a standardized security hurdle they need to clear.
And other factors.
Macro trends, too. Criminals getting more tech savvy, using AI, government focus on borders, fentanyl, trafficking, and just the general need for more government productivity. They see all that driving demand.
So they expect to bounce back in the second half.
That's the plan. They see a clear path to reaccelerate, pointing to an expanding pipeline and the usual Q3 government spending surge.
And the Q1 issue wasn't losing deals.
No, they stressed that.
Yeah.
Not demand falling off, not losing to competitors. It was more fluidity in decision-making, things just taking longer to get signed.
The pipeline's growing, though.
Yeah, especially early-stage pipeline. Suggests the interest is there, it's just timing. They kept saying the software is mission-critical, not shelfware. Agencies have backlogs, they need this stuff.
And budgets.
Some specific programs ended, but they gave examples of new, bigger ones replacing them. They're kind of hoping budget approvals around Memorial Day might bring some stability and clarity.
Okay. What about EMEA, the other softer regions?
Still quite bullish there, actually. Expecting acceleration in the second half, too, driven by investments they've made in go-to-market. Said recent exec visits to the UK, Germany went well, showed commitment.
Interesting. And then there was talk about intelligence and defense. That sounds like a growing area.
A material increase in opportunities globally is how they put it. Directly tracks with, well, everything going on geopolitically.
So they're focusing more resources there.
Doubling down, yeah. Messaging, positioning, coverage. They noted the buyers are a bit different. Maybe command staff versus lab techs. So they're tuning the products for that kind of scale.
Use cases.
Things like securing forward operations. They mentioned Ukraine as an example context. Defense-based security, counterintelligence, field triage. It's a clear growth area tied to world events.
Okay, shifting to strategic milestones. They had a user conference.
First ever. In D.C. Sold out, apparently. Yeah. Around 700 people from 350 organizations, 27 countries.
That's big. Sounds like it went well.
Yeah, they talked about palpable energy, good feedback, collaboration, launched some awards to Digital Justice Awards. Sounds like they want to make it the event for digital investigations.
Builds community, gets feedback. Smart. Product news, too.
Yep. Big spring 2025 release on May 6th. Major focus on cloud for their foundation platform and AI features baked in.
Cloud adoption seems to be picking up pace then.
Definitely. Cloud offerings are getting close to 20% of total ARR now. They talked about how cloud gives a better user experience, helps scale investigations.
And the AI part.
Aimed at boosting productivity, efficiency. But they were careful to emphasize, human expertise is still core. AI is a tool to help the investigators.
They also did some rebranding.
Yeah. The case disclosure platform is now the digital investigation platform. Just reflects the broader scope, intelligence, defense, private sector, not just traditional law enforcement.
Makes sense. What's the latest on the CEO search? That's been ongoing.
4 months now. They said they've met many qualified candidates. Interest is high. Sounds like they're being deliberate, want the best leader.
But the company isn't just treading water.
No, they stress that. Not in a holding pattern. Board senior leaders are focused on execution now, but also looking ahead.
Which includes?
Evaluating strategic options, including potential M&A and organic stuff, looking at ways to expand their market, fuel longer-term growth.
And the interim CEO.
Tom Hogan called the role a professional privilege, reiterated commitment to value creation, customer missions, developing people, and paving the way for the next leader.
Okay, let's look ahead. Outlook for Q2 and the full year. What's the pattern they expect?
Historically, most of their ARR, revenue, and EBITDA comes in the second half. They expect that again in 2025.
So for Q2 specifically, the guidance.
ARR range, $416 million to $426 million. That's 23% growth. Revenue, $110 million to $116 million, so 21% growth.
Gross margin.
Expected within the full year target range, 84-85%.
Operating costs.
$69 million to $71 million range. So flat to maybe slightly up from Q1, which they said is normal for their spending cadence.
Which leads to Q2 adjusted EBITDA of
$26 million to $28 million, about a 24% margin. Keeps them on track for the full year EBITDA target. And share count, mid 250 million range expected.
Okay, but there was an adjustment to the full year guidance.
A slight one, yeah. They trimmed the low end of the full year revenue guide by $10 million and reset the high end too.
Why?
Mostly attributed to timing, pushing some new business deals into the second half, and also slightly lower one-time professional services revenue from U.S. federal agencies.
Importantly, though, no change to the full year ARR or EBITDA guidance.
Correct. They didn't touch those. Management called the overall outlook prudent, basically assuming those U.S. federal spending constraints continue into Q2.
But they expect things to improve.
Yep. Pipeline suggests recovery could start in Q2, but they're being cautious until deals actually close. Very optimistic about a stronger second half, though, especially federal and EMEA, based on that pipeline, seasonality, and the fact that customers need this stuff.
Any worries about tariffs?
They assessed it, believe the current U.S. tariff on hardware imports will have minimal impact on cost of goods sold.
Okay, stepping back. How does this all fit into the bigger picture, the market context?
Well, you can really see the connection to macro trends, right? Geopolitics boosting intelligence defense demand. Tech evolution, especially AI used by criminals, driving the need for better tools. And government spending, well, ebbs and flows, impacting segments like U.S. federal.
So the company's performance is really tied to these big forces.
Absolutely. The fact that, bad actors are using more sophisticated tech, that directly fuels demand for what Cellebrite does. Mm-hmm. They're essentially arming public safety and national security with advanced tech to keep up.
And that intelligence defense growth is a prime example.
Clear link to global events, yeah.
What are the key signals we should take away from this call then?
Progress on FedRAMP is definitely one. Huge potential unlocker for UF federal cloud deals.
Yeah.
Especially thinking about 2026.
Right. Oh, what else?
The user conference success. The new cloud and AI product launches signals innovation, market leadership reinforcement.
And the CEO search, the M&A talk.
Indicators of future direction, potential strategy shifts. Shows they're actively thinking about accelerating growth, maybe expanding their scope.
And that must-have software comment.
I think that speaks volumes about their market position. Even with short-term wobbles like in federal, it suggests a really sticky customer base that relies on their tools long-term.
They also mentioned the corporate side briefly.
Yeah, smaller segment, but growing. Mm-hmm. Mentioned Fortune 50 wins, partnerships like with Relativity, still part of the picture.
And connecting this all back to their long-term goals, that $1 billion revenue target by 2028.
They seem to see this year's slight revenue adjustment as just a timing blip, expecting a catch-up next year in 2026. Pointing to growing use cases, big events like the World Cup creating opportunities, still feels achievable from their perspective.
All right, it's time for that segment. Huge disclaimer up front. This is just us talking, brainstorming based on the call. Absolutely not financial advice. Seriously, do your own research, consult a professional.
Couldn't say it better myself. Purely for discussion, maybe a little entertainment.
So let's float an outrageous but plausible trade idea, like something a slightly adventurous hedge fund analyst might pitch after hearing this call. Given all that confidence in the second half recovery, especially federal, despite the cautious Q2.
Okay, how about this? You lean into that U.S. federal timing narrative. The bet is on a sudden, sharp catch-up, the outrageous part.
Right.
Maybe it involves deep out-of-the-money call options on the stock, expiring late this year, like Q4.
So a bet on a specific catalyst.
Exactly. You're betting that something, maybe that Memorial Day budget resolution actually works, or some unexpected event lights a fire under agencies, causes a wave of those delayed federal and intel defense deals to just flood in during Q3 or Q4.
Leading to a huge beat.
A massive beat on the top line in the back half. forcing a rapid market re-rating because, hey, the timing issue was real and growth snapped back way faster than anyone expected based on the Q2 caution.
That's definitely playing the volatility. Any other angles?
You could focus purely on that intelligence and defense acceleration. The outrageous idea there is maybe betting that global tensions escalate so quickly that defense tech budgets pivot towards digital investigation even faster than Cellebrite anticipates.
So Guardian and Pathfinder demand just explodes.
Yes, surges way beyond even management's bullish outlook for the second half. It's a pure macro bet global events directly supercharging a specific high-growth part of their business, justifying a much higher valuation fast.
Highly speculative, obviously. Relies on specific things happening and happening fast enough to surprise everyone looking at the Q2 numbers.
Precisely. Not advice, just exploring the what-ifs based on the call's narrative in a provocative way.
Okay, so let's wrap this deep dive on Cellebrite's Q1 2025. Key takeaways.
Solid quarter, fundamentally good ARR and EBITDA growth, but balanced against, those short-term headwinds, particularly U.S. federal and EMEA.
Management sounds confident, though, especially about the second half, pointing to the pipeline macro tailwinds.
Yeah, and strategic execution seems on track. Product innovation with cloud and AI, that successful user conference showing customer engagement, and the CEO transition moving forward while they eye future growth, maybe M&A.
And one last time, this was for informational purposes only. It's not financial advice, not an offer to buy or sell anything.
Absolutely. Do your own homework.
They did mention they'll be at some investor conferences soon, so that's another place to look for updates if you follow this space.
That does it for this deep dive. Thanks for tuning in.